Hi, Eric. Welcome to the PowerTalk Show powered by Business Talks Weekly. Thank you so much for joining our channel, joining a podcast today. Before we dive into a conversation, can you walk through us about a bit about your professional background and what led you to come into mortgage, fintech, and a sales coach?
Well, I think I'm like most people that got into the lending industry is that I fell into it by accident. I don't know too many people who grew up, as small children saying, "I can't wait to grow up and be a lender or a banker." I think that's not something we dream about. I
Absolutely.
was born and raised in Canada, moved to the United States in 1999. I had a very bad experience with a bank. And so I wanted to understand the American banking system. And the more I researched it, the more I realized it's something I wanted to do. And so in 1999, I switched careers and got into lending.
So, can you tell us what exactly do you offer to your clients?
Yeah, so we try and focus mostly on real estate financing. And so whether it be residential primary residence or investment properties or commercial properties, construction, renovations, there's a lot of unique things that we can do to help people really focus on building wealth, whether it be a primary residence that you're helping to build wealth, whether it be investment properties, you're helping to build wealth and helping them understand cash flow, tax reduction strategies, etc. That's really our focus is helping people build wealth through real estate in one component or another.
Understood. Understood. So that's interesting. Can you, Eric, tell us like what change in dynamics are you seeing in the current market? Because we are post the COVID era, and currently the economic we read about economic slowdown. We have global war. How is investment mindset has changed?
I would say the real estate market in the United States specifically is very geographically specific dependent. And so what's going on in Los Angeles is not really what's going on in Miami, which is not really what's going on in Dallas, which is not really so it's really, you have to get hyper local in the United States to really understand what's happening in that market. Some markets are, up, some markets are down, some markets are flat, some markets there's a lot of transactions, some markets there's too much inventory. And so it really depends. I get scared about giving a broad stroke and
Makes
saying,
sense.
well, the entire country is doing this. And it's not, it's very hyper local.
Understood. So in that case, how is the trend going? Like, if you look at the global situation right now, there's been up and down, and everyone, they say real estate is a bubble. Is real estate still a bubble in different
No,
regions that is about to burst?
no, no. So when you say real estate, and I've been doing this for 26 years now. And so I've gone through a lot of cycles in 26 years. 2008 was one heck of a cycle. And so that would be a bubble that when people say bubble, right, values went down dramatically quickly.
Yeah.
But that comes from a place of supply and demand. Like valuations of real estate are the same as anything else. It's just supply and demand. And so when you've got a country where, roughly, I think 30% or 30 to 40% of our mortgages in the United States are at an interest rate below 4%. And so those homeowners typically aren't moving, right? They're not going anywhere, right? They're settled down. They're not, why would I sell my house that has a 3% mortgage to go buy a house that has a 7% mortgage, right? That doesn't compute unless they have to. I mean, there's exceptions, but for the most part, all that inventory is not coming on the market, right? So you got 30 to 40% of the homes that are just not going to come on the market at all. So there's no supply, right? Or very little supply. And again, it's hyper local, right? So what I'm saying in one market might not be as applicable in another market, but in general, for there to be a bubble would mean that there's too much inventory. Inventory far exceeds the demand, which is what happened in 2008, right? All the foreclosures. And so the foreclosures and the short sales, there was too much inventory, not enough demand. And so therefore prices plummeted. But that's just not the case right now, right? You still have a lot of buyers. You still have millennials that are turning of age where they don't want to live with their parents anymore, right? They want to go buy a starter home. And the people that are in the starter homes want to buy their next home, right? And so there's just, and you can make, again, you can make counter arguments where Like BlackRock is in other hedge funds, they're buying all this investment properties and they're gobbling up the inventory. Well, yeah, they're gobbling up a lot of the inventories. There's no inventory. Therefore, prices aren't going to come down because there's no inventory. Like it's just think supply, demand, and is there a balance, right? And if there's too many buyers, then prices go up. If there's too many sellers, then prices come down. Well, who's selling? Not a lot. And so that's just not. And you can say, well, real estate values have gone up too much. Well, it depends on the market, but yeah, they have gone up too much. But that doesn't mean they're going to come back down. Just because,
Makes sense.
I mean, we all said that 10 years ago. Real estate values came up too high. Well, here we are; they're even higher. Is it going to stop going up? I think it's leveled off in most markets. I think temporarily.
Makes sense.
As you get more buyers coming into the market, there's still no inventory.
That's interesting, Eric, because as you mentioned about 2008 and the assets that BlackRock and other hedge funds are buying, after post 2008, there have been so many regulatory changes. Do you see, is there a possibility of something similar happen in the near future? Nothing like that, right?
Like 2008?
Yeah,
No,
something that people tend to break the system and then, the market crashes.
no,
Wonderful.
no. I mean, there's
You are
nothing.
very positive about it.
Well, so there's exceptions. Like whenever somebody is sure of something, right? There's exceptions that could happen, right? China could invade Taiwan, right? We could go into World
Yeah.
War III over in China. Iran could drop a nuclear bomb on somebody.
Yeah.
Things can happen that could dramatically change my opinions.
Yeah.
But right now,
You don't foresee anything.
well, I mean, at some point there's going to be a big problem. The United States has, I think, $36 trillion in debt with no ability to make good on it. We have unfunded liabilities coming at us like a tsunami. And so if the United States government doesn't raise taxes, which, you say that out loud and everybody gets angry. But what people don't realize, and I'll give you a little history lesson in the United States. And for those watching this, feel free to Google it and look it up. But the Great Depression in the United States started in 1929, and the tax rates in the United States at that time was around 35%, plus or minus. And in 1930, the next year, the United States federal government couldn't get their budget balanced. What did they do? They had to raise taxes. But do you know what the tax rate was raised to in 1931? If you had to guess, over 90%.
Amazing.
Now, okay, so think about that. And that's a true story. Somebody have your fact checkers look it up.
Yeah.
1929, 1930, 1931. What were the tax rates in the United States, the federal tax tables? So now from 1931 until when was the tax rate in the United States, the maximum tax rate above 90%? For how long? How long did the federal government keep it there? Do you know?
Sure.
Ronald Reagan, 1981.
My God.
50 years. 50 years in a row.
90%.
No, nothing like in a row. 50 years in a row, highest tax rate was in the 90 percentile. Okay, so when the United States defaults on the debt at some point, which we will, where do you think the tax rates are going? You think they're
That's
going to go
hard to
35
predict.
to 36? No,
Not
no.
possible.
It was there for 50 years, man. It's not only possible, it's probable.
That's interesting as well as scary.
No, but if you look at income levels, right? We're talking about high tax rates on people, based on today's money, you're probably looking at people that make more than $10 million a year, right? So if you're making less than $10 million a year, I don't think you got a lot to worry about,
Don't worry
right?
about it.
Like that's like everybody calm down because everybody gets like, oh my God, no, it's not you. It's not you.
The more
And
money
you
you
could,
make, the more you get taxed.
no, but the American tax system is graduated, not retroactive. So you pay this amount when you earn this, you pay the higher only on the amount you earn. It's not
Yeah.
retroactive
Yeah.
back to dollar one. And so there's not a disincentive to make more money, right? That's not how it works. And plus, which people that are making more than $10 million a year, they have tax attorneys and CPAs to reduce their tax liabilities, and they have structures. And so it's not, everybody panics about stuff that's not anything for you to pack.
We are based in UAE GCC. Most GCC countries don't have any taxes at the income level, but Oman has recently announced that they will be taxing in 2032 or 2035 at the income tax into their system. Yeah, so that's
Yeah.
coming
I
for
mean,
us.
oil tax only takes you so far, I guess.
Yes, absolutely. So, Eric, shifting the focus from real estate and mortgage to sales. You are a sales coach. You have written. You are an author as well. How are you see the dynamics changing for sales at each industry? And what challenges are the sales person facing on a day-to-day basis?
Yeah, I think it's getting worse by the day. I think salespeople in general are becoming more and more lost just to the amount of information that they're trying to ingest. I think the true money is made today and moving forward based on specialization. Think of it like a doctor, right? If you're a general family MD in the United States, you might, I don't know, $300,000 a year. But if you're a neurosurgeon, you do one thing. I'm a neurosurgeon, right? You make $3 million a year. If you're the best neurosurgeon in America, you make $30 million a year. So do you want to be a generalist or do you want to be a specialist?
Specialist.
I want to be a specialist, right? And so it makes it easier for you to ingest information because you're single focused. But salespeople are not taught this, right? They're taught to make everybody happy. I think of it like if you're a car salesman, right, or a woman, car salesperson, and somebody's walking into the car dealership, right? You got to sell them a car. Sell that person a car, right? Or could you be a specialist, right? So if I'm selling Mercedes versus I'm selling BMW, you could make an argument that they're both luxury cars, right? I can sell either one because they're both luxury cars. Wrong. Wrong. Those are two totally different brands with two
Different
totally
cars.
different driving styles. If you try and sell each of those cars with the same script and the same mannerisms, you're going to not be successful. And
Absolutely.
so the same applies with what you're selling. I had a conversation today with a husband and wife they're a realtor team, and they were doing advertisements for buyers and sellers, both. Like, no, if you're a listing agent, you have to act a certain way. If you're a buyer's agent, you have to act a certain way, not the same. And so if you try and do both, right, you're bouncing between one of them you don't like. One of them, they're like, yeah, we hate listings. Then why are you marketing towards listings? Right? Just specialize in buyers. I'm a buyer specialist. I only help buyers. Here's why I'm valuable to you. I'm going to save you $10 to $50,000 when you buy your home. Here's how I'm going to save you $10 to $50,000 buying a home.
Yeah,
Right? Get yourself scripted and specialize in what you're doing. And you'll be better at it. You'll make more money and you'll be happier because you're singly focused. You're not trying to ingest all of this information
yeah,
from all these different angles and all these different things. It's just not possible anymore. There's too much information. If you were a salesperson in the 80s before the internet, you had to read a book. You had to go to a live seminar. You could ingest the information. Now, how many emails do you got to read per day? It's too much. Like the human weren't designed for it.
absolutely. Eric, just I wanted to understand, as you were saying about the sales coach and the specialty part, do sales is there a high percentage of salespeople who overcome it in certain stages just to close the sale?
No. Is there a high percentage of salespeople who overcome the challenge?
Yeah, overcome it just to make that sale.
I think there are salespeople who think they muscle through to get a sale, right? But that's right. Like that's not. I mean, okay, you got the sale, but did you get the client? Are you going to get referrals? Are they going to come back to you for the next car? Right? That's a short-sighted strategy to build a career. Right? Like if I'm selling cars, if I'm selling mortgages, if I'm selling real estate, right? I want to create a wow experience, right? I want to go above and beyond from an experience standpoint, and then I want to ask for a referral. Who else do you know that would
Yeah,
find this experience valuable, right?
absolutely.
If
Makes
I'm
sense.
selling mortgages or if I'm selling real estate, who else do you know that's renting that would like to buy a home that think they can't, right?
You
Because
build that relationship.
everybody knows somebody who's renting. Who do you know that's renting? So, you know what? My cousins are renting. Great. Can we set up an introduction? Yeah, you are amazing. Of course I would. There we go. Whereas if you muscle through the sale, it's going to be very hard for you to get those referrals and build a business.
Yeah, you build that relationship. Eric, there's been AI advancement, there's been so many tools, platforms that help sales, build cadences step by step to reach out to their prospects. How do you think these platforms and these technology helping the salespeople to close better?
Here's a quote I heard and I stole. I don't want to say that I'm taking credit for this quote, but it just resonated with me so loudly. Technology is not going to replace salespeople. People still want the human interaction. However, salespeople that adopt technology at a high level will replace salespeople that don't. And so it's not that technology is going to replace us. It's the ones who adopt it will replace us if we don't adopt it. And so what I try and teach is don't try and build it on your own. And it's a gross generalization, but 99.9% of us are not good at building that kind of thing, right? Those are engineer types. But engineer types are not good salespeople, right? And so you're one or the other. You're either a good engineer or you're a good salesperson, right? And if you're a good salesperson, then you're not a good engineer. So don't try and build it. It's built. It's being built. Just plug into it, right? Because if you're trying to do both of those things, right,
It
you're not
won't.
good at one of them, right? And I watch engineer types. Oh, I can sell. No, you can't. No, you can't. You're an engineer. What are you doing? You're not going to make cold calls. You're not going to kick in doors. You're not going to. No, no, no. You're not. That's not going to happen. So
Absolutely.
stop it. There's lots of ways to build wealth.
One final question. What piece of advice did you receive that, change your perspective of how you look at things professionally?
I had a really valuable lesson in 2011. I've had hundreds of valuable lessons. The the way you asked that question, the one that popped into my head, um, I was having dinner with the number one Remax agent in the world, the entire world, and I was doing deals with them at the time, and it was my first time having dinner with them, and there was four of us at the table, and I said to myself, it's number one Remax agent in the world, like I should ask him questions. And have a captive audience. Like, why I should learn something here. And so I said to him, I said, we've been doing business for a few months now. Do you have any feedback for me? Stuff that you'd like me to adjust? And I'll never forget. He looked at me and says, Eric, we're having a nice dinner. Mm, Let's not go there. I was like, oh, there's something. I mean, that's not the answer I was expecting, right? There's something, I'm doing something, or I'm not doing something I should be doing. One of the two, right? And so I said, no, no, no. I promise you, you're not going to offend me. I'm thick skinned. Like, it's okay. But I would really value feedback. I said, well, okay. So all of the, realtors that are on our teams, right? How many of their transactions do you want from a lending standpoint? And I said, oh, he goes, yeah, that's the problem. I said, what's the problem? Like, I'm ambitious. Like, I would think you would want me to be ambitious. I said, yeah, but that word all, it just rubs people the wrong way. I said, hmm, I'm not understanding. Can you explain it a different way? He said, sure. So at the time I was based in Los Angeles, and he said, so in your greater market, the greater Los Angeles market, how many transactions are there per month in the just Los Angeles? I said, oh my God, thousands every month, tens of thousands every month. He said, okay, how many of those can you handle with your team? I said, 30. Okay, 30 out of tens of thousands just in your market, never mind everywhere we're doing business. That's like a glass of water out of a lake. So really what you'd like is some. I was like, some. That sounds better. You're right. I would like some, not all. And I was
Exactly.
like, isn't that a valuable lesson that the language I'm using was causing people to feel rubbed the wrong way consciously? And I was oblivious to it, didn't know. And so immediately changed. And now, nope, don't want all. I'm just like some.
That's a great advice, and even I have learned something today. Thank you, Eric. Thank you so much for the wonderful conversation. It was a delight to have you on the channel today. Thank you.
Thank you so much.